Hello traders, what's up? After a long time we start the live because it is very important day. We have ECB meeting. Actually Lagarde speech, we are waiting, the meeting is already taking place, and we have had as expected no change. And the focus goes to the hello Forex Gang, hello. The focus goes to what Lagarde will tell us. Of course, okay, I'm gonna put here live. Let me find it. This should be live stream. Okay, here we are. Okay, waiting. Starting in 25 minutes. Market, okay, those that are in my group know that I expect volatility here, and you know, when you see those perfectly shaped patterns, everybody's building longs and waiting to break higher, but I wait to see a fake break and then plunge lower. Okay, remains to be seen, but it is what it is. Also, we are okay. If you are trading last days, you notice the situation with Bank of Japan. They keep stepping, intervening, and selling dollars. But of course, because they only have dollars and they don't have any euro or pound to sell, we see this stretching in the market, and we noticed that when the euro, when they are start selling dollars, okay, dollar yen goes down, euro yen goes down, but because they're selling more dollars than euro, actually market makers taking the dollars and they buy euros to get rid of them, we see the euro going higher. This is the anomaly I'm talking about. Okay, same with cable. Especially yesterday morning after the news in GBP, we saw this event happening. For no reason, market overshoot because not because we have had the demand for the cable, but Bank of Japan was selling. Okay, maybe you don't understand this connection, but it's obvious for the experienced traders in the Forex. Let's see. We are waiting for them because we have the pattern that is very predictable. We are waiting for big events where liquidity is big to start to step in, because especially if the news are negative for the dollar, so market already selling dollars, they join them and create a house in the market. I disagree with this, but I think they are doing this because there were some complaints that when they step in during Asian session with low liquidity, okay, they create five figure, 6 figures moves in the yen and crosses, and they don't like it. I don't understand why, but this is what is happening. Anyway, so a good trade is selling the euro yen, because in case of Lagarde being dovish, of course, okay, you understand, euro going down, cross going down. Now, in the event that Lagarde says something hawkish, market will start buying euros, selling dollars. Bank of Japan will take advantage of it, step in. So we are gonna see euro yen going down while euro USD going higher and USD yen going lower. Okay, of course you will tell me why you don't short directly USD yen. Okay, you can, but I have structured with trade. Let's see if works out and how will work out. Thoughts on gold? Come on, gold diggers. Gold, 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 gold. I don't like selling the gold, but I think there is another leg lower coming to test moving average here. It's 52, and then we go down to 40. Of course, use your stops accordingly. Yes, fucking samurai is back. Okay, guys, I mute the chat to do some work, some calls, and come back for the ECB live press conference. Okay, here we go. Bank of Japan is out. Let's book some nice trades. Nice profits in the euro yen. Those fuckers are so predictable. Okay. It's what we were expecting. Okay. Nice profits in the shorts. Euro yen, but okay, very small intervention, I think. The big moves will be now with Lagarde speech. Okay, I'm going to fill up my big coffee and come back. Let me check Lagarde. Okay, we are still, nobody is there. We will watch live the conference. Get ready. 10 minutes, 12 minutes to go. Coming back. Okay guys, are you ready? We have coffee, we have cigars. We cannot have music, but okay. Fucking boss. It's so predictable, guys. It's a joke. They are waiting for a market to start selling dollars for whatever reason, and then they join them instead of doing their own shit. Anyway, they cannot do this forever. They will have to raise rates at some time. But until then, do I have any other open position? Let's check. There's this. We're gonna have this. Okay, ECB loading. Huge event indeed. Okay, let's see what the old lady has to tell us. To be honest, I don't expect anything from her. As usual, she's gonna kick the cans. Okay, now market is selling dollars because we have had some 7-8k difference in the jobless claim. Who cares? Anyway, let's hear Lagarde. Less than 5 minutes to go. Time for one attackers. Oh, I pushed my hand. Fat finger. Almost open a trade. You must be careful with the keyboards. Let's say dollar euro remains sticky because it's due to technical factors. When you have Bank of Japan selling almost $30 billion in daily basis, it's normal. They have cornered the market. Anyway, let's see today. Market will go where it has to go, no matter what's going on with the intervention short term. Okay, what is ECB? Time over. Come on, wake up. Okay, the photographs, and here we go. Let me increase the sound. Let's go! Stop this fucking sound!
Good afternoon and welcome to the press conference of the ECB. On stage are President Lagarde and Vice President Guindos.
Where is Hermes
scarf? As always, we also have participants joining via video stream, so if you have a question to someone joining remotely, please turn on your camera and your microphone. And with that, I hand over to you, President Lagarde, please.
Thank you very much, Wolfgang, and good day to all of you. The Vice President and I welcome you to our press conference. The Governing Council today decided to keep the 3 key ECB interest rates unchanged. The incoming information broadly supports our previous assessment of the medium-term inflation outlook.
Okay.
While some measures of underlying inflation ticked up in May,
she looks like shit. What the fuck?
Most measures were either stable
Put some creams in your
or
face.
edged down in June. In line with expectations, the inflationary impact of high wage growth has been buffered by profits. Monetary policy is keeping financing conditions restrictive.
Okay.
At the same time, domestic price pressures are still high, services inflation is elevated, and headline inflation is likely to remain above our target well into next year. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. We will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. We will continue to follow a data-dependent and meeting-by-meeting approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not committing to a particular rate path.
DSG.
The decisions taken today are set out in a press release that is available on our website. And I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So turning to the economic activity. The incoming information indicates that the euro area economy grew in the second quarter.
What the fuck is this?
At a slower pace than in the first quarter.
How she told it?
Services continue to lead the recovery, while industrial production and goods exports have been weak.
Tell us the fluctuate.
Investment indicators point to muted growth in 24 amid heightened uncertainty. Looking ahead, we expect the recovery to be supported by consumption, driven by the strengthening of real incomes resulting from lower inflation and higher nominal wages. Moreover, exports should pick up alongside a rise in global demand. Finally, monetary policy should exert less of a drag on demand over time. The labour market remains resilient. The unemployment rate was unchanged at 6.4% in May, remaining at its lowest level since the start of the euro. Employment, which grew by 0.3% in the first quarter, was supported by a further increase in the labour force, which expanded at the same rate. More jobs are likely to have been created in the second quarter, mainly in the services sector. Firms are gradually reducing their job postings, but from high levels. National fiscal and structural policies should aim at making the economy more productive and competitive, which would help to raise potential growth and reduce price pressures in the medium term. An effective, speedy and full implementation of the Next Generation EU programme, progress towards capital markets union, and the completion of banking union and a strengthening of the single market are key factors that would help foster innovation and increase investment in the green and digital transitions. We welcome the European Commission's recent guidance calling for EU member states to strengthen fiscal sustainability, and the Eurogroup's statement on the fiscal stance for the euro area for 2025. Implementing the EU's revised economic governance framework fully and without delay will help governments bring down budget deficits and debt ratios on a sustained basis. Looking now at inflation. Annual inflation eased to 2.5% in June from 2.6% in May. Food prices went up by 2.4% in June, which is 0.2 percentage points less than in May, while energy prices remained essentially flat. Both goods price inflation and services price inflation were unchanged in June at 0.7% for goods and 4.1% for services. While some measures of underlying inflation ticked up in May owing to one-off factors, most measures were either stable or edged down in June. Domestic inflation remains high. Wages are still rising at an elevated rate, making up for the past period of high inflation. Higher nominal wages, alongside weak productivity, have added to unit labor cost growth, although it decelerated somewhat in the first quarter of this year. Owing to the staggered nature of wage adjustments and the large contribution of one-off payments, growth in labor cost will likely remain elevated over the near term. At the same time, recent data on compensation per employee have been in line with expectations, and the latest survey indicators signal that wage growth will moderate over the course of next year. Moreover, profits contracted in the first quarter, helping to offset the inflationary effects of higher unit labor cost, and survey evidence suggests that profits should continue to be dampened in the near term. Inflation is expected to fluctuate around current levels for the rest of this year,
here we go.
Partly owing to energy-related base effects. It is then expected to decline towards our target over the second half of next year, owing to weaker growth in labor costs, the effect of our restrictive monetary policy, and the fading impact of the past inflation surge. Measures of longer-term inflation expectations have remained broadly stable, with most standing at around 2%. Let's look at the risk assessment. The risks to economic growth are tilted to the downside. A weaker world economy or an escalation in trade tensions between major economies would weigh on euro area growth. Russia's unjustified war against Ukraine
yes, Russia's unjustified war.
in the Middle East are major
the
sources
same
of
and the same
geopolitical
again.
risk.
Use some
This
other
may
expressions.
result in firms and households becoming less confident about the future and global trade being disrupted.
Boring.
Growth could also be lower if the effects of monetary policy turn out stronger than expected. Growth could be higher if inflation comes down more quickly than expected, and rising confidence and real incomes mean that spending increases by more than anticipated, or if the world economy grows more strongly than expected. Inflation could turn out higher than anticipated if wages or profits increase by more than expected.
With if and what, you don't make
Upside risks to
history.
inflation also stem from the heightened geopolitical tensions, which could push energy prices and freight costs higher in the near term and disrupt global trade.
She's using autocue, look her eyes.
Moreover, extreme weather events and the unfolding climate crisis more broadly could drive up food prices.
What is afraid to have
By contrast,
a bullet,
inflation may
to dodge a
surprise on
bullet,
the downside
like Trump?
if monetary policy dampens
Autocue saved
demand
Trump's life.
more than expected, or if the economic environment in the rest of the world worsens unexpectedly.
Okay.
Looking at financial and monetary conditions now.
Okay, let's see.
The policy rate cut in June has been transmitted smoothly to money market interest rates,
You love
while
the way
broader financial conditions have been somewhat volatile. Financing costs remain restrictive as our previous policy rate increases continue to work their way through the transmission chain. The average interest rate on new loans to firms edged down to 5.1% in May, while mortgage rates remained unchanged at 3.8%.
Okay.
Credit standards for loans remain tight. According to our latest bank lending survey, standards for lending to firms tightened slightly in the second quarter, while standards for mortgages eased moderately.
Okay.
Firms' demand for loans fell slightly, while households' demand for mortgages rose for the first time since early 2022.
Good.
So overall, credit dynamics remain weak. Bank lending to firms and households grew at an annual rate of 0.3% in May, only marginally up from the previous month. The annual growth in broad money as measured by M3 rose to 1.6% in May from 1.3% in April.
Okay.
So in conclusion, the Governing Council today decided to keep the three key ECB interest rates unchanged. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. We will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. We will continue to follow a data-dependent and meeting-by-meeting approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission.
Okay.
We are not pre-committing to a particular rate path. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission.
Okay.
We're now ready to take your questions. Thank you very much.
My first question is why you pronounce fluctuations as fluctuations?
Thank you. Good afternoon. You said that domestic price pressures are still high. Could you elaborate a bit what the biggest lingering concerns were during your meeting around the issue of wages, profits and productivity, and what you would need to see in the data on those points that you're going to get over the summer in order to be comfortable with another rate cut in September? The second question on fiscal policy, are you worried that large deficits and slow consolidation in some countries in the Eurozone could make it harder to bring inflation back to 2% and possibly even create financial stability problems?
Well, thank you very much for you two questions.
Yes, another expression.
Let me start with the second one, and I'm going to repeat for you a paragraph that we discussed and that we slightly modified, but which essentially remains intact with a bit more force probably, which is that national fiscal and structural policies should aim at making the economy more productive and competitive.
I don't like that euro is holding
which
here.
will help to raise potential growth and reduce price pressure.
Okay, maybe we see
an effective, speedy and full
rally
implementation of the next generation EU program, progress towards capital markets union and the completion of banking union, as well as the strengthening of the single markets are key factors that will help foster innovation and increase investment in the green and digital transitions. That will probably echo some of the things that you heard probably this morning when President von der Leyen presented her proposals. What is really important about the fiscal aspect is the following sentence.
Ask her how many rate cuts they are seeing
calling for EU member
states
to strengthen fiscal sustainability, and the Eurogroup statement on the fiscal stance for the euro area in 2025. Implementing the EU's revised economic governance framework fully and without delay will help governments bring down budget deficit and debt ratios on a sustained basis. This was discussed, and we believe that it's a very strong endorsement of the principle of discipline, so that all member states who have adhered and agreed to a set of rules under the fiscal governance framework will actually apply those rules and principles. There is a process that is underway that will take them to submit the multi-annual proposals that will be then reviewed, but this is certainly the set of rules that have to be implemented and respected. Mm-hmm. On your first question, and you give me an opening because you said what was actively discussed in the Governing Council over the course of the last 2 days, and specifically this morning. You know, I see very much the discussions we had this morning as a story of on the one hand, on the other hand. And you're only asking me a question on the other hand, which has to do with the services inflation, which is obviously well exemplified by the domestic prices that you referred to. And the domestic prices is clearly high, has slightly increased compared even with the May reading.
We have IMF saying Fed should wait at least
determined by what I call the
late
WPP,
2024
which
to cut rates.
the wage,
this is good.
the profit,
we like it.
and the productivity. And we spent a lot of time actually looking under the hood of wages, profit, and productivity on the basis of rather limited information, because we don't have a lot of specificity at this juncture, and we will have a lot more of that in the coming weeks and months. But suffice to say that the wages, whether you are measuring it with reference to compensation per employee, compensation per employee on an hourly basis, the wage trackers that we use, and various other instruments, including Indeed, for instance, point us in the direction of rather elevated wages, which were embedded and totally taken into account in our June projections. So this does not come as a surprise to us. There is a very large component of catching up with inflation. So nominal wages increase significantly this year in order to compensate the loss of purchasing power that has been experienced by workers over the last couple of years. What is very interesting, because we debated that including with representatives of the national central banks, is that while it will remain elevated this year, many surveys, and the corporate telephone survey in particular, the SAFE survey that is published, indicate that this trend of elevated wages declined significantly in the course of 25 and even more so 26. So directionally, that's the direction that it is heading for. On productivity, there is a limited element of recovery at very low levels. Productivity was at minus
I'm closing the live
1.
because I
it's
will
now
start
minus 0.6, so there is a little bit of progress, but certainly not what we would like to see. Our expectations is that with consumption picking up, with more demand, the recovery will strengthen.
If you have to ask something, do it now.
Will raise productivity as hoarded employees will be asked to respond to the demand that is addressed to the goods production and service supplying sectors. So on that front, slight improvement in the month of June, and we hope to see more of that as demand picks up. On the third component, profits, it has reversed compared to what we observed in the last quarter of 23, meaning that unit profits are now down to negative territory when they were actually in positive territory in the last quarter of 23. So there has been absorption of the additional labor costs that resulted from the catch-up and from the drift in labor costs. So that's our analysis of domestic prices, but clearly it is high, and it's a component of prices that we try to observe very carefully.
I will try.
Word that you used. You used the word point. And for those of you who cared to listen or to read the speech that I gave in Sintra, I specifically referred to data dependency, which is something that was unanimously endorsed by the Governing Council today. But I also made very clear that data dependency did not mean data point dependency. So we applied that to wages, to other elements that we measured very carefully in the last weeks and that we looked at together in the last 2 days. Sorry, it was a bit long, but you addressed it from the other hand, so I had to cover a bit of ground.
Thank you, Madame Lagarde. And the next question goes to Annette Weisbach of CNBC.
Finally, let's see.
Thank you. President Lagarde, I have a question on the September potential rate move. Provided everything stays like it is right now, so that the indicators coming in line with what you're expecting, are we going to see a rate cut in September? Second question would be on what we're currently hearing from the United States, a possibility of higher tariffs and more trade tension. Is that something you are discussing in the Governing Council as also in terms of reinflationary effect?
Interesting question. Let's hear. She will refrain.
Thank you so much for your two questions. The decision that was taken this morning was a unanimous decision, but what was equally unanimously determined was the fact that we were determined to be data dependent, to decide meeting by meeting, and not to have any predetermined rate path. So the question of September and what we do in September is wide open and will be determined on the basis of all the data that we will be receiving. Obviously, our projection from June will be a point of reference, but the projection of September plus all the other elements that we will be receiving will be taken into account to decide what we do in September. But there is no predetermined path, and that was very strongly endorsed by the Governing Council.
Okay. Bullshit.
The issue of tariffs that you mentioned, that's an important aspect, and we will have internal discussions within the Governing Council about the risk resulting from segmentation, fragmentation, and obviously the tariff increases that are flagged either as to be maintained or to be increased come into the picture. And that is particularly important given that export is one of the
good for listening, because you know those that have proficiency examinations.
Foremost,
you remember that in listening we had all the kind of peculiar stuff. Someone that was gaggling,
salary increases and reduced inflation.
Was speaking like me.
But it's also an increase
like Lagarde,
in trade as a result
difficult
of
to understand. I mean, with strange
export
pronunciation.
out of Europe to the rest
so
of
Lagarde
the world
is a good case study for someone that wanna give examination for taking the proficiency.
Whatever political decisions are made.
And with that, I close
by
this
whoever,
live.
In the future.
Thank you for seeing you all here.
Thank you.
In the middle of the summer.
Goes to Francesco Canepa of Reuters. Francesco.
Let's go!
Thank you very much, Wolfgang.
Buy my traders.
My first question is, you said the decision was unanimous. Did you discuss, or did anyone even want to discuss the prospect and the merits